back to our Money Matters series with Josh. How are you doing today?
Doing great. It's been a little while. How are you?
It has been a minute. I am doing really well, and I am excited to talk to you today about our topic, which is life insurance made simple. And I think many of our listeners would agree with me when we say life insurance is very confusing. It seems like a no brainer to have some sort of life insurance, but then there's all these different variations. And so excited to get your perspective and some tips maybe on how we can approach it. So I
Yeah.
guess we'll start with why is that? Like, why does it feel so confusing?
Well, it's not just that it's confusing, it's also just very uncomfortable. There's only these certain moments in life that are inevitable. And of course, everyone's life has a period of time, and that's something that is scary for a lot of people. And no one wants to think through, what happens in that moment, especially if it happens sooner than we would like it to happen. I think that's a really big part of it. And then it's very overwhelming also because there's just so many different types of policies and people's recommendations, and there's so many people out there that have these really really strong opinions that you just don't know, how do I find my own thought process? And that all that stuff combined together tends to just give you that kind of paralysis by analysis for a lot of people, and then they just throw it on their to-do list and then they never get it done.
Yeah, I think you're right. I think, and we've talked about this in earlier sessions where even with investment strategies, right? There's so many opinions about how to approach financial planning and what works and what doesn't work. Are we going to do a Roth IRA or a traditional IRA? And there's different opinions. And so I think you're exactly right. We see the same thing here with life insurance. And so let's jump right in. So one of the most confusing things for me is what's the difference between all of the different types of life insurance? So term life versus whole life, and how do I know what I need when?
Yeah, that's even the more challenging part. Is it's a whole industry within itself. And so there's not just term life and whole life, but there's level term policies, and then there's increasing premium policies, and then there's portfolio based life insurance, variable life insurance, universal life insurance, index life, and you start getting all wrapped into that. But the premises tend to break into those two pieces, like you mentioned. There's term insurance, and then there's whole life insurance. And the easiest way that I think of it is, think of term insurance as a if I die type of policy. So if I die in this window, my family gets money. So if you have a policy through work, your term is your employment. If I die while I'm employed, my family gets money. If I die after employment, my family gets nothing. Whole life insurance is less of an if and it's more of a when, because the policy is built to never expire. So it is not a if I pass away, it is at some point in time, because it happens to all of us. This is something that is going to show up for the family. And then there's a lot of different reasonings why you would do one or the other. And everyone has their own individual situations that they need to consider when they're going through all that.
And what are some of those things that we need to consider to kind of help us decide which path we want to go down when we talk like term versus whole life insurance?
Yeah, a lot of times it has to do with just where you are in your life, stage of life. Obviously, there's financial considerations as well. If you're paying for an if this occurs type of policy versus a when this occurs type of policy, premiums can be substantially different also. And so that's a big piece to it as well. But it also comes down to, what are some of the longer term risks that we're trying to plan for? Do we just have kids underneath the roof of our house right now that we want to make sure that while they're our responsibility, that we have protection, and at some point when they're adults, they may not need our protection, we may not need the coverage anymore? Or is it a situation where we have a special needs kid that will always be under our protection, and we want to make sure that the plan can live for as long as we do? And so everyone's going to have a different situation that you come into. And I think we'll explore that here in a little bit, or what are some of those key things to be considering to be working through that.
So I have a couple of things that came up for me as you were talking through that. I feel like throughout our series, we continue to go back to this theme of risk mitigation, right? So as we're talking about financial planning, we talked about risk mitigation. And now again, as we're talking about life insurance, risk mitigation. And so as we think through mitigating our risk and understanding our risk, right, not only to ourselves, but to our family, I feel like a lot of people think, oh, well, I have life insurance through my employer, so I'm covered. Would you say that's accurate? Would you say there's a misunderstanding, or what more things do we need to think about when we're talking about life insurance?
Yeah, and that's very common, and I love that companies do this because, we mentioned earlier, there's so much out there that can create paralysis by analysis that often people don't do it themselves. And so being able to get it through work is very helpful. And not even just that, but often insurance companies will have a lower price for work policies because you're risk sharing across everyone at the company. So it's a great way to get a lot of coverage and not pay a bunch of money as well. The challenge that we see is now you're tying the protection of your family to your employer, and that's something that does have something worth considering. You know, just because you have a great job today doesn't mean you're going to have that same job in 5 to 10 years from now. And do you want that to be what decides on the protection of your family or not? So, whenever I meet with our clients and we're doing financial planning and we're in the topic around life insurance, one of my big focuses around it is if you're healthy enough and youngish enough to go look out in the market privately, even if it costs you a little bit more money, but if we can get something in place that you can carry with you wherever you go, that tends to just give you a little bit less doubt on the success of this plan. And if we're talking about risk management, our whole idea is to remove the doubt.
Yeah, I like that. One of the things you mentioned is, how much coverage you need. So how do we know how much coverage we need? I mean, myself, I go in there and I'm like, oh, well, I mean, I guess that this sounds good. We'll go with that. So how do we start to think about that and truly understand how much we need versus, what would be a nice to have, let's say?
Yeah, well, and that's another big challenge. And I think one of the areas that I see gives me a lot of concern for a lot of people is they will often discount their value to their family needs, whether it's because they're just trying to save some money or whatever it might be, and they'll say, "Hey, I have $200,000 of life insurance and I feel great." But if we take a step back and look, well, they have a need substantially larger than that because of the goals that they have. So you know, if you're working with a financial planner or you're working with someone that can plot your numbers and your goals and your aspirations, then that's going to be one way for you to work through that. And what they'll do is they'll take your balance sheet, how much debt do you have, what your income is, what your cost of living, and they'll be able to plot all that together and show you, hey, if you're out of the conversation, what's the gap between your current lifestyle and you no longer being there? But if you don't have that and you're just working through it on your own, there's a few key pieces that I always tell people: write these things down, add them up, and that's a great starting point. So step one is uh, how much debt do we have, and would it be a good goal to have enough life insurance to pay off all our debt? I think about my own personal situation. Debt becomes one of the biggest things over your head throughout my own personal life. And if something happened to me, if I could have all my debt paid off, that takes a lot of pressure off of my wife and my family going forward. So mortgage, car payments, student loans, depending on type of student loans, often uh, government loans, public loans are forgiven if you pass. So you want to look into some of those things if it's a big part of your debt consideration, credit cards, all that kind of stuff. The second thing that we look at is there's just a fact that passing away in today's world is also not cheap. And that's a weird thing to think about, but you got a funeral, maybe medical bills, there might be a period of time where you're taking off work to go through all the arrangements. So we typically encourage people to allocate somewhere between like $20,000 to $30,000 to cover expenses like that in that period of time. And then from there, once the debt's paid off and we're back up and running in kind of our normal life, the final pieces are: is your gap between the income that you were bringing in and what you need for a living going forward? Especially if you're a single income household, that becomes an even more important piece to consider. But if you are or if you're not, that's another thing that we'll look at. So if you don't have a good grasp on what that could be, often you just take the income that you were making, take home pay after all your expenses. You can deduct out what you were paying towards the debt because that's no longer an expense that you need to worry about. and then multiply that by 12 to make it an annualized dollar amount, and then multiply by the amount of years that you want to be able to replace that money for. And if you have kids that are 10, maybe you say, my goal is to have enough of this to replace my income until they're 22. So multiply it by 12 more years, whatever that might be. And then the final piece to sprinkle in is if you have some separate goals that were really important to you that you want to make sure are accomplished. I want to send my kids to college. That was a big goal of mine. If I want to make sure that my parents have some separate support or whatever it might be, add on some of the other pieces. But it's often debt, it's often readjustment expenses, it's often replacement of income, and then it's the final major goals. Those are the four things that we typically look at. If you can add that up, that becomes a really good starting point.
I have just kind of a question that I'm curious about. Across the board, just generally speaking, when you look at people's life insurance, would you say that they are overinsured or underinsured when it comes to this?
That's a tough one to ask because it's easy to put a case of someone be underinsured, but also life happens, and sometimes all you have is what is available to you. And so it's less about that and more about just finding peace, knowing that if this is what I have, even if that's all that you have available to you, sometimes you're not healthy enough to get more coverage, or you're just financially not in a place where you could justify paying for more bills along the way. Then I think just having a good plan, having a plan in place is a great starting point.
Yeah, I love that. I also like, along that same vein is knowing, the peace of mind essentially. Like, and we've talked about that with your financial plan and even your goals, right? Everyone's goals are different. And so, where do you individually need to land in order to feel like you're in a good place and you're quote secure, right? Like you're secure with your plan, you're secure with your life insurance. And so one of the things I think people think about as we're talking about life insurance is the last thing that we want is our families to have a financial burden, right? As whenever we pass away or any loved one pass away. So what choices do we need to make today so that we're alleviating that financial stress in that moment, right?
Yep. Yeah,
So,
definitely.
what are some of the biggest mistakes you see when people approach buying life insurance? When they're faced with that decision, what what are the things that they're either thinking about that they shouldn't or not thinking about?
There's a few that come to mind when I was thinking through this question. I think the first one is a lot of times people wait until they need it versus forecasting when they think they're, forecasting the goals that they have and planning for it. For example, let's say you're a young couple about to get married, aspirations to start a family, you're about to buy your first house. You have all these things that are starting to show up as goals along the way. And you say, well, once I have the kids and I have the house and I have all these things, now I'll get the life insurance. But as you know, Christina, life insurance is based on age and health. And so if you wait until you're older, it's going to cost more. And if there's a risk of your health being potentially different in the future, that you may not even be able to get life insurance. And so I think one of the first things is thinking through not just where you're at today, but trying to make sure you're forecasting with some of these shorter term goals and taking that into mind for your need to consider your life insurance. I think the other big one that we look at, we mentioned it earlier, but it's relying on your work life insurance. Sometimes that's all you have. Once again, if your health is not great or you're at an age where private market is just not really attainable to you as well, then lean on the work benefit is just fine. But we have a big encouragement for all of our clients that if we can go private and have our own policy that we can carry with us, that's a really great place to go. And in today's world, you can find life insurance anywhere. Your car insurance guy can do it for you. You can Google it. I mean, it's like your neighbor down the street probably sells it. I mean, you'll be able to find it. You just got to be able to put some priority around it and try to go outside if you can. And then the last one is just not taking a look at it every now and then. Over time, your needs should, in theory, change. The whole reason why we even have life insurance is just because a lot of us are just not self insured. Our dream is to not need it because we can take care of our own. But if we're not there, that's when you take the risk off the table and say, well, until I can self insure, I'll trade that risk with this company who will protect my family while I work hard to build up my own planning that I can do it on my own.
You mentioned that we should review it every now and then. And we talked about that with our financial plan, right? Like how often should we revisit our financial plan and do those check-ins? So at what point should we review? I mean, confession, like I signed up for a term life insurance plan in 2014 or 15, and I don't know that I've ever looked at it, right? I also still enroll in employer plans. On top of that, I'm blessed to have that ability, but I don't know that I've ever really looked at my coverage. And so, when should I consider looking at that? Like, what says, oh, now is it time? Is that on an annual basis? Is that an activity basis? What does that look like?
Yeah, I mean the appropriate answer, the financial planner in me says every year, right? I mean that every year, like you should be looking at your balance sheet every year, looking at your cash flow every year, just so you have a general idea of what you have going on. But that's not as easy for everyone, and so a lot of times it is more life milestones that can be a big piece to it. But back to what I mentioned earlier, if you can get to a point where you're checking on it every couple of years, just doing a quick audit of how much debt do I have, how many years am I replacing income. That kind of back to what I mentioned earlier, those kind of four major pieces: debt, readjustment, income, replacement, and then any major goals. And just trying to go through that and just seeing like, am I still covered? Because what you'll often find is if we're doing a good job on saving and building and being good stewards of our resources, our need for life insurance tends to go down over time. And so what may end up happening is you wake up 10 years from now and you think, well, it's just I have coverage, that's great, but really you're just way overinsured and you're paying too much money for what you actually need, which is still better than being underinsured, but maybe not necessary.
Yeah.
And then I think the last piece is also to take a look at the expiration dates if they're term insurance. If you have a policy that you started 15 years ago and it's a 20-year policy, then in 5 years you will no longer have life insurance. And so you might want to take a look and see, like, do I need it for more than 5 years? And if so, I need to start thinking about maybe replacing that policy with a newer time horizon, just so that I don't have this situation where my health could be different. I'm now 20 years older, and now the cost is no longer able to be taken on, which could be a huge concern.
I like that. Honestly, we do review our financial plan every year, but I've never even thought to bring that to the table, right? It's like, yes, I have it, and we move on. And so I think I just never really considered it. So, it's interesting to think about life insurance and then also like in parallel your financial plan. So how would you say that life insurance fits into your financial plan? How do we consider it? How should we look at it when we're looking at our financial plan holistically?
There's so many risks in this world, Christina. I mean, you see it for everything. I mean, you can get insurance for your phone, you can get car insurance, you get home insurance, you get insurance for your travel. I mean, you name it, we can insure it. I mean, there's a risk across anything that we can go out there. But if you're really looking at it from a financial planning perspective, there's three major life risks that are what we want to put the most energy of planning around. The first risk is living too long. What if you're the first person to make it to 130 years old? That's a long time. You got to make sure that if you are retiring at 60 or 70 or whenever you chose to retire, that your money lasts, which is where we put a lot of energy around saving and investing and using our 401k, because we want to make sure that we're building an appropriate balance sheet to survive for as long as we do. So that's the first one. That's the big part of financial planning. The second major risk is if you die too soon. That's what we're talking about here, which has to do with the life insurance, but not just the life insurance. I think the other really important piece here is that's just a resource to help support the family. But just as important as life insurance is getting your estate plan put together as well. Whether that's having a will or a trust or a combination of both, depending on your needs. That becomes more of the actual roadmap for the family. Because I've also had people that I'm close with who have had spouses pass away and have left them the appropriate amount of life insurance, but with no roadmap. And that is just as devastating as someone who didn't have life insurance in the first place. And so I think that's the second one that we try to put a lot of energy and planning around. And then the third one is if the income stops, you lose your job or you become disabled or you have a major health problem and you're going to the hospital. And that's where we want to make sure that we're also planning for income protection, because typically what drives the goals and helps you accomplish it is your ability to create income to support those things. And so this conversation we're having today fits perfectly in the middle of those, as the life insurance is really just as important from a planning standpoint as it is the investments that we've had most of our conversations on in the past.
Yeah, I like what you said about that there's the two risk, right? Like it's what if you live too long? And then there's what if you don't live long enough? And I think maybe the consideration of what happens if you live too long maybe makes it a little bit um, of a more comfortable conversation for people, right? Because we're not only saying like, what if you don't live long enough? We're also saying, what if you live for a really long time? And so I love that perspective. So the other thing that always comes up when we talk about health and or life insurance is what do I do about my beneficiaries? So who do I leave it to? How do I think about that? What should it look like? I think the next question that always comes up is, does it go through probate? Does it immediately go to those, to my beneficiaries? Where does it go? And so talk to us a little bit about what are beneficiaries, how does it work, and how do we decide who should get what, who's our beneficiary?
Yeah, and that's a really great consideration with all this, and not just with life insurance, but retirement plans, investment accounts, maybe even bank accounts, depending on how you have it structured. The beauty of a beneficiary arrangement is they essentially trump everything else. So you could have all of these estate planning documents in place, say all these wishes and aspirations, but if you have the beneficiary saying it goes here, that's going to skip probate. That's going to go directly to that person that you've assigned once the company has been able to prove that you've passed away. And and so whenever we're taking into consideration, that's another big piece of this reviewing it every year. Sometimes that need can change as well. Uh, and everyone's going to be so different. Is the gap to take care of your spouse who's supporting the kids? Or is the gap to take care of your parents who you are going to take care of them in their retirement? Maybe it's a combination of both of those things. Maybe it's this commitment to an important organization that you have. We have a lot of clients that maybe will assign a percentage to their church or a percentage to a nonprofit that they're really involved in. And it's something that they said, I've committed myself to that. And if I'm not here, I want us to accomplish those goals. So it does come down to what was the point of the life insurance, debt, it's back to debt readjustment, income replacement, and then the major goals, major milestones that we want to plan for. And sometimes it's easier to just throw it all to the spouse if you have that relationship with the spouse and you trust that they can handle it. If you don't, then another big piece of estate planning is if you create a trust, you assign the trust, and then the trust is executed based on your goals, and it's a way for you to become a little bit more personalized with how you want these things to be broken up.
I like that. And I think additionally, even if you do trust your spouse, right? Sometimes having a trust and having those, to your point, very specific roadmap of how you would like these funds to go forward is a blessing to the spouse, right? That they have a clear understanding of your wishes and they know how to execute that without having to doubt themselves, right? In a time that can be really heavy and very emotional. And so, what a gift to say, hey, here this is, and these are my wishes. One question that I have is I think a lot of people just assume that your life insurance policy or even like your financial plans just automatically go to your spouse. And so I want to just highlight that again, that that's not necessarily true, right? It goes to whoever you designate as your beneficiary on
Yeah,
each of these, correct?
that's right. And even more so, you need to be a little bit aware of double checking these beneficiaries. I've heard of stories where someone has a new spouse and passed away and they left their ex-spouse as a beneficiary. And before you know it, there's not really a way to get around that. It goes to where the wishes were put. And so it is pretty important to make sure that you're keeping an eye on who's there. Or if you have a new kid that shows up, add them to the beneficiary so that they are involved in the legacy if something were to happen to you. So those are some things that are important when you're checking on it every year.
That was a good point. Um, I feel like I have a little bit of better understanding of life insurance. I want to revisit one other thing, and this is probably more for personal gain, but hopefully our audience has the same question as well. We were talking about term life insurance, and we said it covers us for a specific period of time. So 10, 20, 15, 30, whatever the years are. And you said, if you have one coming up in the next like 5 years, you might start looking at it. What does that look like? When is too soon to, like, is that adding another one? Is that amending your current one? When is too soon? Or like, do you want to wait until that one's fully expired before you renew it? Like, what is the timeline of that?
Yeah, I think what I've seen in the past, and of course it's going to tie also to the stage of life that you're in, but what I've seen in the past is when you're about halfway through the policy, that's a good time to be reconsidering. Because let's say it's a 20-year policy and you look up and you think, well, I'm definitely going to need this for 20 more years. You extending it for those 20 years is going to end up traditionally being a lower cost than if you waited to the expiration of the policy, because now you're 10 years older and they're averaging the risk of those next 20 years. And it's an easier way to be stair stepping into the plan in that way.
Nice. Okay.
At the same point, a lot of term insurance policies have provisions that can be converted to permanent policies as well. And often there's a period of time. So a lot of 20-year policies can be converted in the first 5 to 10 years to permanent insurance. So if your needs tend to change and you're thinking, I want to have this more as like a legacy tool, depending on the needs, or some policies can build cash that can be used for additional resource for retirement or other longer term goals. If that becomes something that you're wanting to incorporate in your planning, then that's something that you'll have to typically do earlier in the term insurance policy, so you don't have to go through underwriting and go through all the whole trying to get approved for it again.
Okay. I like it. So, in closing, what are, let's say, one, maybe two things that you would want our audience, our listeners, to walk away with from this episode, right, regarding our life insurance?
So this will probably be everyone's least exciting episode that we're going to go through. I think we've had a lot of really fun, podcasts here the last couple of weeks, and we have a couple more that we're going to be doing that'll be really exciting. But I do want to stress this is probably the most important one, because we can invest and we can save and we can build all day long, but if something happens to you tomorrow, none of that really matters. What matters is taking care of the family, and if you need that, that needs to be really important to you. And if you don't feel comfortable taking on this conversation alone, then go find a financial planner that can help you with it. And I think this is important. There's a lot of people out there that have access to help you put life insurance in place. I would encourage you to try to find someone who does financial planning and not just insurance representation, because you want to make sure that they are helping you identify the needs and the values and the types of policies that fit you as an individual. I think that's the biggest thing, is just don't wait, prioritize it, and you always sleep a little better at night when the policies are right sized to your need.
Absolutely. And definitely having someone who, you mentioned has this holistic view of your entire financial plan, and that includes life insurance policies. So ensuring that you have, not just like a plug for a financial planner, but that you have the right person that has that holistic view, right? It's like if you go to just a heart doctor and they don't consider the rest of your, medical conditions. You want someone who's looking at you as a whole person. And so love that advice. Well, thank you so much. I feel like I've learned a lot. Hopefully, our listeners have too. We appreciate you as always. Enjoy speaking with you. And we'll be back soon with our next episode.
Of course, thanks for having me.